everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. Welcome back to Moneyline with Nancy. We will be examining the President Tinubu's newly signed tax laws, as I said earlier. And with me right now in the studio is Dr. Kennedy Iwundu, the immediate past chairman of CITN Abuja District. Dr. Iwundu, thank you for joining us and welcome to the program.
It's a pleasure.
Okay, where should we start from? You know, like I mentioned at the beginning of the program, I've been looking at this issue since Friday last week. The president signed it on Thursday, and I've been painstakingly, small, you know, because there are 4 tax laws, and a lot is technical, apparently, and for those of you that are tax practitioners, very technical, but my goal is to be able to break it down. That's why I'm doing this. I've been doing this since Friday. My first question to you would be, how do these 4 tax acts, the Nigeria Tax Act, the Nigeria Tax Administration Act, the Nigerian Revenue Service Act, the Joint Revenue Service Act, these 4 tax laws, how do they work together structurally and operationally?
Yeah, they have to work together because we have what we call the tripods of taxation, starting from the tax legislation, tax administration, and tax jurisprudence. So when you are reforming the tax of a country, you don't just go and only change the laws. You're going to look at the administration, the body that's supposed to collect, assess, and carry out enforcement. Have you made them efficient? You also look at your tax jurisprudence, the body that will adjudicate these taxes, that will interpret the laws. Have you also made them efficient? So when I say tripod, I'm talking about tax legislation. Tax legislation will drive the tax administration. And the tax jurisprudence will look at what the tax legislation is saying. Is it what the tax administration is doing? So that is why you have the Nigerian Revenue Service and that of the Nigerian Tax Administration Act. They are there to drive the tax administration. The Nigerian, the one that drives the tax jurisprudence included the Tax Appeal Tribunal and that of the Tax Ombudsman. And why the Nigerian Tax Act will not drive the tax legislation. Have you seen how the 3 works? So that's why you must put the 3 in the proper perspective so that they can be able to make sure that you have efficient tax reform.
You know, these tax laws, we were saying even before the break, or during the break, you know, for those in the committee and all of that, they go on talk about these tax laws. They hail them as bold, as necessary. But beyond the symbolism of reform, what does this tax laws, what do they really mean in terms of real practical implementation? What do they look like? Are we institutionally ready for this?
Absolutely.
We're institutionally ready?
Absolutely. Let me give you an example. The personal income, in terms of taxes for taxation of individuals, if you are earning 1.3 million now,
annually,
yes, you're exempted from tax. This comes from the rent allowance of 500,000, and the first 800,000 that is 0%.
No, please come again, doctor. Sorry.
If you are
Start
earning
again.
1,300,000 in the country, by next year, you'll be exempted from tax because you'll be granted 500,000 rent relief. Then there will be another 800,000, 0%. So by the time you add 800,000, 0% to the rent relief of 500,000, you will be granted 1.3 million. That means you'll be relieved of 1.3 million.
Assuming that's 1.3 million or less, is that?
Or less.
Yeah,
1.3 million
because
or
some
less.
people earn like 50,000 naira a month.
Exactly.
Which is like 600,000 naira
Yes.
a year. Does this also apply to them?
But again, the rent relief is not absolute, but qualified. What makes it qualified? One, you have to bring evidence of that rent paid.
To your landlord?
The law, yes, to the revenue authority for you to be granted.
So
the revenue authority says, the tax law says, your rent relief should be 20% of your rent.
So assuming, for example,
Your rent is 1 million.
Yes.
So 20% of 1 million is 200,000. That's what they grant you. But the threshold should not pass 500,000. For example,
for those earning
higher.
1.3 million naira and less, is that?
No, the threshold of the rent
Yes.
relief should not pass 500,000. Assume that your rent is 10 million. 20% is 2 million.
Yes.
You can't be given 2 million. It will stop at 500,000.
So does it mean that in this law that you will definitely get a rent relief of 500,000 naira? Is that what you're saying?
Yes.
Whether you're a small...
It all depends on your rent. Assume your rent is 1 million.
Yeah.
20% of that 1 million is 200,000. That's what they will give you.
That's the tax authority.
For you to get rent of relief of 500,000, that means your rent should be up to 2.5 million. That's why that's why I say it's qualified. It's not absolute. Because if you don't bring evidence to prove that you've paid the rent, you may not be granted that 20%. So it's good Nigerians understand how this thing works. It's not to dash everybody. And again, if you're a landlord, you're not qualified for that rent relief.
So, doctor, I don't want to be... I want us to break this thing down so that,
Yes.
in as much as we want explanation, we're not getting more confused.
Yes.
From this law, does it mean that all of us are entitled to a rent relief?
Everybody is entitled to rent relief because they abrogated, they eliminated the initial consolidated allowance. Normally, we have consolidated allowance, which is 20% of your total income plus 200,000. That has been abrogated. That has been eliminated. So they replaced it with a rent relief, which is 20% of your rent, but it will not be more than 500,000 naira.
So even if your rent is 5 million or
if your rent now is 20 million, 20% is 4 million naira. That means they will give you 500,000.
From that 4 million?
From that 4 million. But if your rent is 1 million, 20% is 200. They will still give you 200. They won't give you 500 because, but the 500 is the threshold you will not surpass. So Nigerians, possibly, is those who can claim that their rent is 2.5 million that can maximize it.
How do you now claim it? You have to get a receipt from your landlord.
Of course, either rent receipt or rent agreement to show that you paid such rent.
So which tax authority do you take it to now?
To the State Internal Revenue
Service. Thank you. That's it. You just got me to the State Internal Revenue
yes, absolutely.
Service.
Yes.
You know, not of course NRS
yes.
as it should be known from next year. Okay.
So Nigerians need to understand the nitty-gritty. So it doesn't be like everybody will be granted rent. No, it is qualified. You have to provide evidence that you have paid rent. If you have not paid any rent or you're a landlord, you are not qualified for rent relief. So it's clear.
So if I'm a landlord now, it's a problem now that I'm a landlord. And
you're a landlord, you are not entitled to rent relief. It's just to relieve those people that are paying rent. You understand? Then again, I also want to say, even though this tax law is trying to help the low-income earners, it's also pushing those who are earning more income to pay more.
So it's taxing the wealthy more.
That is what
taxing
we call
the rich.
Progressive taxation, taxation of high net worth individuals. For example, under the current law, under the current application, if you are earning 50 million, you are paying 9.2 million in a year.
If you are earning 50 million,
in a year,
is it as an individual or a business?
As an individual.
So
if you are earning 50 million as an individual now, under our current law, you're paying about 9.2 million. But by next year, you'll be paying 10.3 million.
That's a lot.
If you are earning 100,000, currently you are paying 18.7 million. Next year, you'll be paying 22.
That's if you are earning 100 million.
In a year.
In a year.
Currently, you are paying 18.7 million. By next year, you're going to pay 22.8 million. So now, those who are earning more income should
pay more taxes.
they should start ready to embrace more taxes. Because we have exempted, government has exempted the lower cadre income people, and they have to compensate by getting more from those who are earning. It's progressive taxation.
Which I asked Taiwo that day he was here on Friday.
Yeah.
That they are saying, you know, they are going around and saying, okay, these tax laws are pro-people. But I also asked him, how, you know, how do you balance it? Because if you're saying pro-people, it also needs to be pro-revenue.
Absolutely.
As it were. So the government was also smart in terms of making more money from the rich. But my question now is, the rich over time, you're a tax practitioner, you know what I'm talking about. The rich over time have evidently evaded taxes, or they don't pay as much. Do you think with this now that the rich will be able to avoid those, will be able to still continue in that stead? Would they still pay more? They will find a way to circumvent the system?
You know, you have said it here that when you make laws and those laws are not efficiently and effectively implemented, it will look as if it's a wish, it's a mere policy. So what we expect government to do moving forward is a situation where government will have the political will to implement these laws to the letter. If government implement the laws, the rich will pay the taxes. But if government on its own part don't have that political will to implement the laws, of course the rich will continue to evade these taxes. But let me tell you, a rich man also may avoid the taxes based on some technicalities. They do hire us to tell them easier way. Let me give you an example. A rich man that has a company may say, if my company makes profit, don't pay to me as a profit, pay to me as dividends.
Dividends, yes.
Now, if you pay him that money as a profit, he's going to pay high tax if he recognizes it as an income. But if you pay him the money in a way of dividends, he may suffer a small tax compared. So the rich will also try to employ all strategies to engage in tax avoidance. Remember that tax avoidance is legal.
Legal, yes.
What is illegal is tax evasion.
evasion.
So that is it. So the rich in the country should begin to employ the loopholes. But again, at the end of the day, we are not saying that they shouldn't pay their taxes. They should pay the fare of their taxes, because what government is doing now is to go back to the main ideology of taxation. And what is the main ideology of taxation? Redistribution of income and wealth. Yes. When you tax the rich and use their money you have collected for the benefit of everybody, including the poor, you are distributing income, you are redistributing wealth. That's why in the United States today, in UK today, you see people attending free medical program, primary health program free, primary education free. What is the funds used to run it is money paid by the rich. So by so doing, the higher you earn, the higher you pay.
Now the question is, the number of the rich people that we have, progressively, if they begin to pay these taxes, will that be enough to plug in the loopholes? Because, for example, now this new tax law has raised the small company exemption from 25 million naira it was to about 100 million naira turnover. A lot of people say, okay, fine, it's a game changer for small businesses. And it has also exempted the small companies, I think, from CIT, if I'm not mistaken, from capital gains tax and development levy, if I'm not mistaken. But the government must look for revenue. With the rich in this country, the number of the rich people, or I'm not even sure they're up to 1% elite, will the government make money from that to be able to redistribute this wealth? I hope you understand what I mean.
The government can make money from there.
Because the government is not taxing the poor. Will the monies from the rich be enough to address the issues of the country?
Absolutely. People buy houses in Maitama here, Sokro, 5 billion, 10 billion, 2 billion. Where are they getting the money? Tax them and get the money. What government needs to do is to have the political will, that's number one, and again, employ the use of technology. If you employ the use of technology today, if the revenue service can employ the use of technology and get all the bank accounts you have, and get all the money you are making, now you pay the tax. So what government needs to do is to apply technology in tax collection and, in fact, the political will. We wouldn't like to see a situation where the revenue service is at the door of a rich man, either his company or his personal income tax, and a call comes from president to say, hold on. Now, if you get that call from president, say, hold on, leave him for now. That means you don't have the political will to collect these taxes. So we want a situation where even when you call Mr. President that this revenue service are on my door, he'll call you, my friend, we need money to run this country. Please cooperate with the revenue service and pay your taxes. So when we have that political will from the president, even his associate can say, no, we can't do this. Go and pay your taxes. Everybody will fall in place and everybody will pay taxes.
For the small companies that the turnover has been raised from 25 to 100 million naira that have been exempt from this, what kind of businesses fall into that bracket? Have you been getting questions around that? Because was it on Sunday? I hosted, a couple, and the guy was really asking me questions that on their platform, a lot of things have been going on. And I try to advise. I try to, go to the YouTube channel, check out what my interview with Taiwo Yedele and co. So you're seeing a few misinformation.
Yeah.
Are there some kind of businesses that fall within that 100 million turnover?
The law says companies, the word is companies that have 100 million turnover and below are exempted from all taxes. But there's a proviso. The company assets must not be more than 250 million.
The company's assets?
Yes, must not be more than 250 million. That means if you have a company whose turnover is 100 million and below, and the assets of the company is more than 250 million, you are no longer a small company. You are going to pay tax. Let Nigerians understand what the law is saying. It's not a blackened thing. If you, as Nancy has, set up a company today, and your company is having 100 million turnover and below in a year, but the assets of that company is more than 250 million, 500 million, 1 billion.
So I'm not more a small company.
You are no longer a small company. You're going to pay tax. Then number two, people who are doing businesses with business name are not involved. They're not going to benefit. Because some people do their business with business name. And they'll be thinking, jumping up, that they are going to be part of it. They're not part of it. They say limited liability companies. So many people are doing business with business. I normally advise people to leave operating companies and use business name. But it's like my advice is gradually changing. But I'm not trying to make some people to be angry with me. But I think
it was the exigency of that time.
I think I'm in a position now to be a tax consultant for all Nigerians at this point in time, and give them. So they say companies whose turnover 100 million and below are exempted. There's no specification. But again, we should have the proviso that is there. The assets must not be more than 250 million.
So in case that person is involved in a printing business?
Yes, and the assets is more than 250 million. And the revenue authority will find a way to tax the company.
Okay, but if it's not up to, that person, that business does not pay tax?
It doesn't pay tax.
Okay.
And if the printing press is operating on the business name, it will pay tax. Even if the business name, you have 1 million turnover, 2 million, you pay tax, because there's no difference between a business name and you as a person. But a company is a person different from the directors. So we need to understand these things.
Is there any other thing you wanted to say?
No, go ahead.
Okay, because there are so many things around this law. You see, I have a lot of papers.
Yes.
I have to, I'll take a look at them gradually. Now, let's take a look at this capital gains tax. For companies, it now aligns with CIT at 30%. What problem do you see this solving?
Yeah, initially under our current law, if you have a cap, if a company dispose a property or dispose an asset, the company is expected to pay 10% on the gains of that asset that be disposed. But under the new law don't want to separate it again. The new law wants you want the company to recognize it as an income. And the new law wants 30% tax be on it. That's exactly what they have done. Formally, if a company disposes an asset, it will treat it separately and pay 10% on the gains of that asset. But under this new Nigerian tax law, they are trying to bring that disposal. They don't want you to treat it as a capital gain. They want to treat it as part of the income of that company that will be taxable at the rate of 30%. But I also want to say something to Nigerians now. Under the new law, if you acquire an asset, qualified capital expenditure, you will no longer have initial allowance. Initial allowance has been abrogated. So what you have now is just one annual allowance on a straight line basis, meaning that a company now is likely to pay more because capital allowances that the government normally grant you will be reduced.
Okay. So many things I'm just, and I know we will not have time to look at it.
Yes.
But let's take a look at this. The Economic Development Incentive replaces Pioneer Status.
Pioneer Status, yeah.
Offering about 5% capital expenditure credit over 5 years. Is this likely to offset the new levy or not?
Yeah, but again, there's something in that replacement of Pioneer Status. They're saying that the president will be signing it.
Wouldn't that also be a lot of bureaucracy and bottlenecks?
Exactly, that's the problem because they believe that those who have been signing it have been abusing it. So at this time, it has to go up for the president to sign it. But again, the Pioneer Status is the economic incentive. Depends on the nature of business you are doing and what you intend to do with it. But I also want to talk about VAT.
Yeah, that's my other question.
Yes.
Okay, what area of VAT do you want to talk about? Because I also wanted to look at the input VAT recovery is now possible. How will this affect businesses like schools, manufacturers, and
it will positively benefit the companies because prior to this time, or currently as we are practicing, if a company acquires an asset and suffer VAT, the Revenue Authority will not allow us, based on the law, to recognize the input VAT suffered on capital expenditure. They will tell you that you should capitalize that expenditure.
How does that input VAT work? Because this is just technical. Can we break it down a bit, please?
Input VAT is simple. If you buy something, let's just practicalize it. You bought an item, 100 million. The VAT on it is 7.5%. When you are buying that item, it's 7.5%. So that means you suffered 7.5 million. So assuming that you sold that item at 100 million, at 200 million, you are going to collect VAT. That means you are collecting VAT of 15 million. So at the end of the government will not collect 15 million from you as the output VAT. You will now less what you have suffered when we are purchasing that item. Is that clear? Input, you are buying something. When you purchase something, you suffer VAT.
Yes.
So when you sell, you also collect VAT.
Collect VAT, yes.
You are not supposed to pay.
That's output VAT.
Yes, output VAT is the one you collect. You are not supposed to pay the whole output VAT to the government. Rather, you now remove the one you suffered during the purchases from it. So
which is the input VAT.
The input VAT. So when you remove it from it, whatever is the balance, you now pay to government. That is input-output VAT adjustment. Okay. You understand? So currently now, if you buy an asset and there is input VAT, they won't allow you to recognize it as an input in your taxes. They will ask you to capitalize that asset, capitalize the VAT in the asset. But in the new tax law now, when you buy an asset, whatever taxes, whatever input VAT you have suffered, you are going to use it to offset your output VAT when you are making returns to the Revenue Authority. So that is a very good one. We've been advocating for this particular thing for a long time, not telling us to capitalize that input VAT as part of the asset. For example, now, if it is before I bought an asset of 100 million and I suffered an input VAT of 7.5 million, they will tell me to capitalize my asset. So my asset will be 107,500,000. That's all. But now I will only put 100 million as asset and keep that 7.5 million to use it to remove what I'm supposed to pay as output VAT. Is it clear?
Yes, it's clear to me, but I'm just hoping that it's also clear to Nigerians, because what I'm just thinking is that this is too technical, and one edition of the show is not enough to be able to break all of this down. But let's take a few questions from the audience. Our audience have been sending us messages on our WhatsApp platform, so my team, we can actually put that on air now. This is coming from Kabiru Sulaiman. He's asking, my question is on the effect of the new income tax law to average civil servants in Nigeria. According to the new income tax law, the civil servant receiving below 800,000 annually is free from tax. Unfortunately, as of today, no civil servant in Nigeria that is receiving less than 800,000 annually, considering the recent rise in the new minimum wage, which is from 35,000 naira to 70,000 naira. I guess that is a comment, because what he's trying to say is that even civil servants will not be exempt from this.
No.
Since 70,000 naira is the new minimum wage now, which is, you understand what I mean?
Understand? No,
Yes.
but again, he's getting it wrong.
Okay.
Remember that before this 800,000, that is 0%, other exemptions have been done. PENCOM has been removed. National Housing Fund has been removed. National Health Insurance Scheme has been removed. Mortgage interest on owner-occupier must have been removed. There are so many exemptions. By the time you exempt PENCOM, exempt National Housing Fund, exempt National Health Insurance, exempt insurance premium, exempt mortgage interest on owner-occupier, and now grant rent relief, and also grant the first 800,000. You discover that most of them are out of the woods.
So are you saying civil servants in Nigeria
What I trying
or
to...
from what level as a civil servant would you
No, the
now
point
be?
I'm making, let me allay the fear of this person.
Yes.
They won't start exactly to grant you 800,000. They'll start from giving you all the exemptions. So by the time they give you all these exemptions, before they get to the 800,000, the money has finished now. So at the end of the day, you end up not paying, you're paying little or nothing. That is exactly what I'm saying at this point.
Okay.
The tax authority will not go straight to grant you rent relief and remove 800,000. If you are registered and you are remitting PENCOM, National Housing Fund, National Health Insurance Scheme, and other exemptions allowable by law, they will, first of all, be removing those things from your salary before they will get to remove the 800,000. You understand the point I'm making? We'll be having technical sessions on that so that by next year, people will understand exactly what is
the
ongoing.
6 months enough between now and
Six months is enough
enough
because
to educate Nigerians?
I feel it's okay.
And even for those of you that are practitioners.
I feel 6 months is okay. What we need to do is to have a lot of technical sessions across board, in CITN, in ICANN, in ANAN, in all the professional bodies, Tax Practitioners Association, then start getting our clients to educate them, to teach them. I'm sure 6 months is enough for you to understand. And again, most of them will also come to us by next year for us to help them file their returns, for us to help them do the needful. So definitely, most people are not even interested. Like, some of my clients will not be interested to know what is it. Then, Dr. Kennedy, you know what it is. I handle it for us. That is it.
Yes, yes. Okay, the next question is from Ojiako Anthony, and his question is the problem of tax collection at the local government level, from one local government to another, add different taxes on vehicles plying the roads, airport tax, radio emission, and many others. Please, that should be looked into by introducing one tax that covers all for local government areas in the country. With these new tax laws, how will the SIRS, that's the State Inland Revenue Service, how are they keying in into all of this? Does it make them now autonomous? Because there's an NRS right now. How will they also work? I asked Taiwo last week also. I asked them these questions as to, I hope I will not be stopped, you know, or people say pay TV license, pay radio license, local. How will it? He said there's a framework already within the law, but it's not that it would be eliminated just right away.
I want to say, Taiwo and his team, the committee, what they did was to repeal about 29 federal tax laws and harmonize them into 7. But what is important, if you want to eliminate multiple taxation at the local government and state level, the National Assembly needs to go and visit our constitution and reduce the number of taxes and levies collected by local government and state. They can go and look at the long list of levies collected by local government and say, no,
bicycle tax.
we want you to only collect maybe tenement rate and one development levy. When you get that one development levy, use it to solve all your problems. They need to go to the state to say, we want you to collect maybe personal income tax, collect ground rent, and one development levy. With that development levy, use it to solve all your problems. Until it is done, the local government and the state will still go about collecting the entertainment tax, collecting the FCT want to.
So yes, so at the end of the day, how does it now position this new tax laws if we're saying, oh, it is a game changer? Meanwhile, businesses are in states. I hope you understand what I'm saying, because the state as well as local governments will still be doing what they're doing, while the federal has already harmonized its own taxes, because the businesses are in the states.
I think
you understand what I'm saying? Governor Wike is on aggressive revenue drive. I had the FCT IRS chair at the time, I think a couple of months ago, so speaking on that. So So what does this tax really do for us as Nigerians? I hope you understand.
You understand? What we expected Taiwan, the committee, which I felt they have done, or maybe they would do, is to present to the National Assembly to go to our constitution. You see,
I think they said the
responsibility,
yes.
the responsibility of the local government to collect tax is in the constitution.
Yes.
The responsibility of the state to collect tax is in the constitution. Until you amend that place, you can't stop them from collecting those levies. Bicycle levy, radio licenses, street. You must go there to say, local government, see, this long list of levies and fines are collecting, you will not be. Collect only tenement rate and maybe one development levy.
Just like
that's
they
all.
did for federal.
Thank you very much.
In
the state, you are no longer allowed to collect this long list. What you should do, collect personal income tax, collect ground rent, and development levy. All these things you are listing in the constitution, deleted. Until National Assembly do that, the multiple taxation we are seeing in the state and local government will persist.
Okay. This question is coming from God's grace. I see a lot of questions coming in. My team has been sending me. Let's see. If I pay VAT at the shop, can I demand for my VAT certificate? If I charge for VAT, how can I get the VAT certificate to issue my client?
What you should issue your client is receipt.
Receipt from your company.
You don't issue certificate when VAT is paid. Are you getting the point
Yes.
I'm making? So it's a receipt. It's just the VAT receipt you are going to give your client. It's not a certificate you are going to give your client.
Which one is VAT receipt? Wouldn't it go also with the sales receipt, for example?
That's what I'm saying. When you make sales
Yes.
and VAT is collected,
It's included in that.
Yes, it's included in that. But again, when payment of that VAT is paid, the system, the FRS will still generate a single receipt of that VAT.
If the owner of the business, as a business owner, you remit the VAT.
Yes.
Now, that's what you're saying.
When you remit VAT online and get remitter to pay, the system will still generate receipt on that particular VAT you have paid.
Okay.
Apart from the fact that you have quoted it in your sales invoice.
Okay, I hope God's grace, your question has been answered. This is coming from, I don't know if there's a name here. Good morning. When you say essentials are exempted from VAT, does it also include essential workers? In fact, I asked my team to put this on when I saw it. You know, because essentials have been exempted from VAT, like food, education, and health. And he said, does it also include essential workers? So I want to imagine this person
Who is the essential worker?
Those in health, perhaps teachers,
there's
nurses, and all that.
There's nothing like that. You're only exempted based on the threshold
the
of income.
And
when they say food, when they say food has been exempted, it's not when you go to Transcorp or one hotel and eat food.
Yes,
when
it's not that type.
When you eat food in a restaurant, you pay VAT. I'll tell people that if you get to your farm and get yam, cocoa yam, it's not vatable. But when you fry that yam, or cook it,
and make
plantain chips and garnish it, and you are not selling it in a
restaurant.
You have added value to that yam, and you are going to collect VAT from whoever that is eating that yam.
So does that mean that if I buy packaged gari in a supermarket, and at the end of the day, when I want to make my payment at the payment area, I should be charged VAT on that?
Packaged gari.
Yeah, packaged gari or packaged amala.
Packaged gari is not. You have not added value to it now. You have not added value to packaged gari. Just like the argument you have on bottled water.
No, but with what you are saying right now, that if, let's take plantain chips, for example, and I go to a supermarket just here in Asokoro and get it, am I supposed to pay VAT on that?
Plantain chips, they are not, it all depends. If you go to the exempted list, you are going to see the details of what has been exempted. What we are trying to say is that when somebody is adding value to collect more money, like if you go to supermarket and get gari, nobody will charge you VAT. But when you now do the gari and want to sell it, or we're selling it in the restaurant, that is when VAT will be charged on it. Are you getting the point I'm making?
So I hope that is understood.
Exactly. So that's what we're saying in that regard.
Okay. Okoro Oscar says, how about someone who imports goods and pay the VAT on the customs duty? Does the person need to pay VAT on the same goods as part of the company tax at the point of remitting VAT of his company? Is it not the amount? Does it not amount to double taxation?
When you import your goods and pay VAT, that serves now as an input VAT. When you import your goods into the country and pay VAT during the import, it serves as an input VAT. So when you must have sold those goods, you must have collected VAT from government to pay, which is output. So what you do, you now use that input VAT you have suffered during importation to reduce the Apple VAT, offset the Apple VAT they're paying to the government.
Victor Amaku says, how does this new tax laws affect poorly paid civil servants? Are they going to be paying more or less? I think
I've explained that. They're going to pay less. They're going to pay less. But those who are earning higher are going to pay higher.
Who are those earning higher? The directors?
To him, whom much is given,
much is expected.
Much is expected. Because this is exactly what happened in other countries. Taxation of high net worth individuals. In UK today, you may be earning very poor income, and they will exempt you. Then you will be trying your best to earn a higher income. Once they take you to a higher income, they take the much tax from you. You end up almost becoming like a person who has not been paying tax.
Okay.
But that is not the case of Nigeria for now. We're just starting. This is the starting point.
Okay, Sunday is asking, from what he has said, people earning less will pay more tax. I don't think you heard that right. Is this the right thing? How does it make sense? People earning less will pay more tax. You didn't say that.
No, I didn't say that.
Yes, so that's not the essence of this new tax laws. Sunday, I hope that has been taken note of. Chima is asking, please, how would the average public servant begin to benefit from this new tax laws? I think you've also answered that. I don't know if it's the same question, but okay. Akman is saying, please, my question is going like this. Policies are easily made, but implementation and enforcement is the problem. I'm also asking the consultant this question. What are the channels or points in which Nigerians who are to benefit on these tax reforms? I don't know if I understand that question.
The government under this new tax law has set up the tax ombuds. And under that tax ombuds, if you are aggrieved over the way tax administration has been handled, you can go and report for them to look at your case. That's a very good development. But I also want to say something in this low-income earners especially. But I want to say it clearly. If you are not working in government agencies and well-organized private sector, you may likely not benefit from this low-income earning something. Because if you're a market woman or a businessman, how do we know that your income is 1.3 million in a year? Do you have a good banking record?
Accounts, yeah.
Do you have a good banking records that can show the revenue authority that your income is? So it's easy to ascertain that the income is low when you are working in organized private sector and government, because the payroll is there to see what is being paid. But if you are not working in government, if you are going to the revenue authority to say, I'm a low-income earner, they will ask you to bring your bank statement. Even when you bring your bank statement and they are not satisfied, they can ask you to pay tax, because it might be there's some money you are not paying to the bank account. Nigeria don't have data now to know what everybody is earning across board. So lack of data is one of the challenges we are having, especially in implementation of personal income tax in Nigeria.
Okay. Ayo is writing in from Festac. The biggest beneficiaries of these new tax laws are tax consultants. I guess that's what he wants to write. The Oyibo is too much for ordinary Nigerians to understand. Ayo, that's why I'm trying to break this down. You know, I've been doing this now for the last 3 days on this show. I'm just concentrating on this tax matter. He also asked a very important question. What happens to the VAT case, Governor, when he was governor?
Yes.
Wike won when he was governor.
Yeah,
you know, I think that there was a case, Rivers State, then Lagos State.
Yeah.
Especially with this new tax adjustment around VAT.
The truth of the matter is that our constitution never anticipated that VAT would be a big source of revenue to the government. So during the time that we are making the constitution, there was never a time it was stated that federal government should collect VAT. And the judge made it clear that federal government is not supposed to collect VAT. So the matter went to the Court of Appeal, from Court of Appeal to Supreme Court. They say everybody should stay, status quo remains. We didn't hear anything again. But the information I'm hearing is that the National Assembly is trying to make a law to now ask federal government to collect the VAT. You understand the point I'm making? Because it became political.
Yes.
It became political because the court ruled that there was never a time in the Constitution it was given to the federal government to collect VAT, and that's very clear. Even when FRS was trying to defend it to say they were asked to collect VAT under value-added tax law, the judge said no. There's no constitutional provision that you should collect tax. Any law that is inconsistent with the Constitution is not to its level of inconsistency. So that is why when it got to some point, it became a political thing, and the Supreme Court and other people don't want to talk about it. But the feelers I'm hearing is that the National Assembly want to now make a law where they will now say, okay, federal government collect VAT. But for me, I have made an opinion on that VAT, I prefer VAT to be under concurrent tax, where the federal will be collecting, the state will be collecting. You can say state government collect VAT from state government contracts, from companies operating in your state, from individuals and enterprises. Federal government collect VAT from federal government contract, from multinational companies, from non-resident companies. So you can do it in a way where federal is. So you can give the powers to the state to collect. State cannot be babies every time you're collecting and sharing them. The governors are becoming too lazy. That every time you ask them to stay, you collect and share them. That will not augur way to the development of the country.
Okay, let's take a look at another question from Tommy Onoha. What happens to a limited liability company that has been out of use due to tax issues? Will there be any backlog if it is to be reinstated to take advantage of the new system?
No, if you have a limited liability company that is out of business, what you do
because
is...
of tax issues, due to tax issues. That's what he says.
Can a company be out of business because of tax issues?
So people can just say, okay, let me just close the company.
No, if you want...
I'll go and open another company.
No, if your company... Let me educate Nigerians. If your company has stopped operations for whatever reason, it is your duty as a director to notify the revenue authority that this company has stopped operations. And let me tell you, when you notify them in writing that my company has stopped operation, make sure you don't pay money into that company's account. And when you commence again, you also notify them that their company has commenced. But again, the law made it very clear that whether you are in business or not, file your returns. Some people today will say, why I'm not filing the returns of my company is because we are not making money. The law says whether you are making money or not, file your returns. If you are not making any money at the end of the year, you can call your consultant, see, I didn't make anything, look at my bank statement. He will take that blank bank statement and file a new return for you. For not filing returns, you are going to pay penalty. And you know the penalty has increased from 25,000 before on the first default and 5,000 every month. Now it's 100,000 on the first default and 50,000 every month. So people should be very careful. You may have a company that is not doing anything. Only penalties for not filing will run into millions of naira. And you'll be crying, why are they asking me to pay millions when the company is not doing anything? They are asking you to pay millions because you have not been filing your returns, and these are penalties for not filing returns.
All right, this question goes this way. For retirees on contract who will not benefit from deductions on housing, will surely be heavily taxed.
If you're a retiree on contract,
yes, for me,
the money you earn from the contract will be subjected to tax. But if you're a retiree and you are paying rent, of course, you'll be granted rent relief. And the 800,000, 0%. Except you're a retiree and you're a landlord. And I said it earlier in this program, if you're a landlord, the rent relief is not for you.
Okay, let's take a look at tax residents. It's now clearly defined.
Yes.
Can you clarify who is now caught up as a tax resident, including dependents and those abroad? And does this also discourage perhaps Nigerians in the diaspora?
Yeah, tax resident, if you are here as a person and you are earning income here, you're a tax resident. You're also here as a person, but you're working for a company in the US, and you are earning income here, you're also a tax resident. Am I making a point? So once you are here and you have a source of income coming to, either the income is coming within or outside the country, you are a tax resident and you're expected to file your income tax and pay tax on it.
You know, there's something called now in this law, VAT fiscalization.
Fiscalization, yes.
Yes. How are businesses expect to implement?
Yeah, the business is expected to implement it. If the National Revenue Service come to your organization to plug in their system to make sure they get information about your VAT remittance and you refuse, you're going to pay a penalty. I think it's about, is that 2 million or 5 million? Now, well, let me give you an example of that. I've said it in this show a long time ago that I was in the United States around 2013. When I checked into a hotel, as I was paying the bill, hotel bills, my sales tax, because United States operate what we call sales tax, they don't operate VAT the way we do. The sales tax from the payment was automatically deducted and remitted to the government. Are you getting the point I'm making? So this is what I would suggested we should do. You don't allow the owner of a hotel or eatery to collect VAT at the end of the month and now decide what to give to government. They want a situation where just to go to ShopRite. You know, go to ShopRite, as you are paying, ShopRite is automatically deducting from the the VAT from FIRS and remitting instantly. So their system will show all the VAT deducted, collected, and remitted.
Okay, director told me that we have to go now, but can I just crave your indulgence and ask this in 1 minute? The indirect share transfers now, what do they call it, capital gains tax,
Yeah.
even when the deal happens offshore. I will want you to speak on that. Then the second thing I want you to speak on, this implementation starts in 2026.
Yes.
What happens and what is one piece of advice that you will give to business owners now and individuals? Just very quickly.
Yeah, for the share,
Yes.
you know, you have to get to the threshold of 150 million and above before you can pay capital gain tax on the shares. Are you there?
Yes.
So we should be wary of the threshold stipulated by law. Then for businesses next year, owners of businesses should try as much as possible to study the law. And most importantly, whatever you are doing next year, hire a tax consultant who will advise you so that you will not run the foul
For
of
people
law.
that don't have money.
No,
because you guys are not cheap.
Some of us are giving free. You can come to my office, and I'll give you advice for free.
Okay.
Thank you.
So, and you can send in your questions too on the show. For example, where you're having that confusion, and we'll try as much as possible to answer it. Thank you very much, Dr. Iwundu.
Thank you for having me.
This show is like a masterclass this morning on this newly tax bills, not bills now, laws, yes. And I'll continue this way. Let's see. I hope that you've been able to be informed this morning. That's it on today's edition of the program. I've been speaking, of course, with Dr. Kennedy Iwundu, who is the immediate past chairman of CITN Abuja District. Be the best you can be and be the change that you want to see. Bye for now. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.